Welcome to an interview with part of a series of conversations with industry-leading professionals across the risk and governance markets. My name is Rob Starkl, Managing Partner here at the Risk Partners, and I'm delighted today to be joined by Paul Kelly. Paul's worked for global banking giants JP Morgan, HSBC, most recently as Global Head of Cybersecurity Risk, Compliance and Remediation. Paul, good morning. How are you doing today?
Oh, I'm good, thanks, Rob. How are you?
Good, really well, thank you, really well. Thank you for joining us. Very much been looking forward to our conversation. So thank you for taking the time. I know our viewers will be very interested to hear what you have to say today. So I'll tell you what, let's kick off from the start. Well, how did you get into risk management?
Yeah, so I think it's fair to say I've been involved in risk management pretty much all my working life. My initial career was in the Royal Air Force. I was an engineer officer, and that was all about managing airworthiness. It's just another type of risk. And even then, as my career developed and I ended up getting involved in things like strategic defence review, it's just managing different types of risk, that sort of geopolitical and strategic risk for the country. How do you do that in a meaningful way? You've got to balance what you've got available in terms of assets and find what you can afford against what you're trying to mitigate. So,
right.
And then when I came to leave the military, it seemed like a natural fit to move across into financial services, and I found my place in operational risk at HSBC.
Fantastic. Did you find that of interest? Because we quite often see that that transition from the military into banking and certainly into risk management. Do you find that the training that you get there sets you up nicely for that?
Yeah, definitely. I think what's interesting about a military career is, again, it's all about taking risk, but you want to. It's taking risk in order to achieve an objective. So you go flying, you want to fly from one place to another. Gravity's pretty unforgiving. You are going to take risk when you leave the ground, right? But it's mitigating it so that it's actually as safe as possible in order to achieve something. So I think when you're thinking about risk management, often we think about, we've got no appetite for risk, but that's not really true, because what we're actually trying to do is take risk, but in a way that helps us achieve something, but without too much detriment.
Right. Wow. And I guess, applying that in banking and financial services, you're going from trying to stop a plane fall out of the sky into, making a financial services firm stop losing a lot of money based on their activity.
Yeah, look after its clients. Don't lose client data, don't lose money. Just look after your clients, help your clients achieve whatever they're trying to achieve, help your business grow. And I think the other thing that's interesting is, aviation is a highly regulated environment, right? Right. Military is highly regulated. We deal with a lot of things that are sort of on their own would be deemed to be unsafe. Yeah. So it's a highly regulated environment. So it's a natural fit when you come across. You can see there are parallels.
Yeah, that's fantastic. Cool, excellent. So obviously, we've had an interesting couple of years with the pandemic and everything that's been going on. Obviously we're off now into 2020, 2022. What do you see as the biggest challenges really from a risk management standpoint in 2022 for firms?
Yeah, so I think if I address this from more, what are the challenges for risk management functions as opposed to, what are the risks, because we know what the risks are. I think is keeping pace with the pace of change, right? As we move more into the 21st century, we're moving to different platforms, we're moving to the cloud, we want to digitize everything needs to move quicker. We're talking, payment systems are moving to real-time payments as fast as possible. That's what our customers want, seamless transactions. How do you bring your risk management teams and your risk management functions into the 21st century as well? How do they keep pace with the change in technology, keep pace with the pace of change in the way we're doing business?
Yeah.
And how do you really take your risk management function into the 21st century itself? Are the models that we used in the past really still appropriate? Should we still be doing annual RCSAs? Is that really the right way to provide assurance? And there are better ways to leverage the data that's now available as you move to digital. There's much more data available. Yeah. How do you leverage that data? Can you get to near real real-time understanding of what's going on with your risks and how is everything operating. You could build systems that allow you to do that, and in terms of, we need to integrate that with our compliance as well. Can we demonstrate compliance at any moment in time? I think there is an opportunity to be able to build those systems where you can respond to a regulator's request pretty quickly and say, yes, here's the evidence that my design is compliant, and here's the evidence that it's working as well, and here's the evidence that I'm managing my risks, because I've got maybe not real time but near real time ability to analyze the data. I think you can also use the data to then say, well, how do I use the data to help me, if I'm certainly a sort of second line defense oversight organization, how do I use it as a trigger to help me go and look where I need to go and look and be intellectually curious around how do we do that. I think the challenges there as well are, within those functions are finding the talent, finding the capabilities, actually not just finding the talent, but also educating your team. How do you get them trained in new technologies? How do you get them intellectually curious? How do you make yourself helpful to the business and help the business achieve their strategic objectives by keeping an eye on your oversight and taking your function into the 21st century.
And do you think as things continue to progress, because risk management obviously has come on in leaps and bounds over the last 20 years or so, do you think the business are now more open to listening to what you have to say from a risk management standpoint? Are they taking on board the value that they can add, whether it be data, whether it be analytics, whatever that is? Do you think we've kind of gone through that, I don't know, teething problems that sometimes you'd find in the early days, but do you think we're now in a point where the business is much more open to working in hand with risk management?
Yeah, I think so. But I think that comes down to the risk management professionals, right? I think you need to be commercially aware. I mean, one of the things that in the past has helped me is identifying where we're over controlling. If you're spending far more money on controls than you're actually you stand the chance of losing, then why are you doing that? That's not helping your customers buy their houses, grow their businesses, but you're tying up money that's not necessary. And I think we need to be thinking as risk professionals, how do we help the business achieve its objectives, but achieve them in a safe and sustainable manner, rather than the sort of boom and bust that people have talked about in the past? How do you help get there in a sustainable manner? And I think if you are engaged in that, and you're engaged in helping the business, and you're seen to be that partner is helping them achieve it in a strategic way, then yeah, definitely you're in the right boat. But if we're sort of still just tick boxing, or particularly, we've got audit, that's great, and so does the second line need to do audits as well? I don't think that's the case. It needs to do assurance and be that sort of trusted advisor. And I think we'll come on to talk about it later when we talk about the 3 lines of defense. But it's about how do you help them get the right controls in place, get the right control monitoring in place, get the right understanding, so that you can really understand that, yes, I'm good at what I'm doing and I can go faster if I want to. For example, if you're migrating to the cloud, if you can demonstrate that your teams really know what they're doing, and you can provide that assurance to say, yeah, look, I've got metrics to show that your teams are really good at migrating their activity to the cloud and managing their cloud really well, then actually you could be saying, well, it's okay to take more risk here, or to help the business understand that there's plenty within our appetite to do more here. As opposed, so it's just about that. Let's think about how is it that we use the information that we've got to enable risk taking. That's what risk management should be about. It's about enabling risk taking in a sustainable way that helps you grow your business or achieve your business objectives.
In your experience then, based on that, do you think that firms have a propensity then to take higher risks given the amount of information that is now available to them?
No, not necessarily. I think there's still quite a risk averse, an aversion to taking risk, but that's possibly because we don't know. I mean, there are different people have different approaches, don't they? And some people don't care. Some we're just going to go and do it anyway. I don't care. I'll just risk accept it. Other people are like, oh, I'm not sure. Is it right? Can you help me? So I think what we need though is that ability. Going back to what's the challenge for risk functions is to be really there going, yeah, look, this is the risks that we're currently taking, or understand where we are, and do we think that that's a comfortable risk to take, and have those grown-up conversations around, is that level of risk comfortable? If it's not comfortable, what do we do about it? Or actually we could go a bit further that way because we seem to be managing it very well. Ultimately, risk management is just about managing your business well, and being able to demonstrate that you understand your business. I mean, the way I describe it, I think the purpose of a risk management function, if you think about it, I like to think about it this way: you can drive down the road with your boot open for two reasons. One is you've chosen to drive down the road with your boot open because your bicycle's hanging out the back and you need to get your bike home, and that's the only way to do it because you can't close the boot with the bike in there.
Yeah.
Or you're driving down the road blissfully unaware that you didn't close the boot properly. And I think a risk management function is there to make sure you're in the first case, that you're actively taking risk because you understand all the variables and you've gone, okay, I'm making a decision to do this, rather than the second camp where sort of taking risk but blissfully unaware that you're taking risk.
Yeah, I love that analogy. I think that's a really good representation in terms of the awareness of actually what's going on. And like you say, I hope most firms are in the latter category there. So
yeah, and I think the and that former category, that, or either category, the risk management firm is risk management function is not necessarily there to tell you that you have to close the boot, right?
Yeah.
It's the boot is open. Are you comfortable with that? And that makes sense.
Yeah.
Or actually, no. Thanks for telling me the boot's open. I really don't want to drive along with the boot open. I'm going to stop. I'm going to close it and then get going again, because that wasn't my plan.
Yeah. And I guess it's down to the individuals at the top of the pyramid to make that decision in terms of how they're going to be driving and how they know that.
Yeah, unless you're on the other side of the, you've got to that point where, well, actually the regulations say you definitely can't drive down the road with your boot wide open. So we need to stop and close it.
Yeah, I mean, I think that kind of moves on quite nicely then to my next question here. Then, do you think financial services firms view risk management now as an overhead or a department to really add intrinsic value to the business?
Yeah, I think it's interesting. You've got to ask yourself, why do you have a risk management function? Right. What is the reason for it? Why? And I guess it depends on how does the business see the reason for it. Is the reason for it simply because we have to, because the regulators say that we have to, and so we've got one, right? And it's an expensive overhead, and it's there, and it's doing the things the regulators tell it to do, and it's doing there? Or is it because I actually see the value in having a risk management function that's helping me? Is it helping me achieve my goals by actively helping me control my risks and understand my risks in a way that allows me to achieve my strategic goals in a meaningful manner? Is it contributing? Is it a commercially focused contributing to those strategic activities, or are we just in the ticking boxes because we've got to tick boxes because we've got to demonstrate to the regulator we want to? And I think that the extremes of both exist, right? So the better firms are the ones who will be saying, no, I really see the value in this, and I'm investing in it because I think it makes sense. And I think, but to enable that, you've got to have risk professionals that are taking that approach as well. Do you need to have armies of risk and control people and compliance people because you've got manual processes and you don't trust anybody, etc., or have you got a lean set of function that's really leveraging data to help you understand where your risks are, and you're helping you improve and make your processes more efficient, but also making sure that your customers are you're helping? Ultimately, you want to attract and retain customers,
right?
I mean, that's how businesses grow: attract and retain customers. So how is our risk management team helping us see that that's the right way to do that and to manage those associated with it?
Yeah, and I think that's a really important point as well. I know that a lot of people have had conversations in recent years about challenger banking institutions, for example, and how the advantage that they've come into the market and have arguably been more able to give that faster customer experience, quicker decisions along the way, which seems to have worked for a lot of those firms. And then I guess we've then had to see this shift and this change of how things are done with some of the larger, more institutional type institutions out there. But then I guess on the flip side is then the larger, more established firms have got a wealth of data and information to bring from. I guess it's then a question of putting in place the right frameworks and systems in order to make that decision process quicker and easier.
Yeah, and I think that ultimately the disruptors are there. They're doing good things. They're disrupting and showing different ways they're challenging the way people are thinking.
Right.
And say, well, actually, that's good. That's healthy. The question is, how do I then, make sure that we're delivering what our customers need and do that? And actually I think having a marketplace where there are challenges is healthy. And you can see how different people are taking different approaches to that. But it's a bit like in some countries, there's no need for a wired phone because they've jumped straight to the telephone, the mobile phone technology. So yeah. You've got to be, okay, we've got to be malleable enough to see what is the, let's call them the older banks, what are they leveraging, and they're in a great place in the market. But obviously they still need to change. And I think the disruptors are sort of showing you what it could be like potentially, and then how do we change? And I think that's it's not just happening in banking though, it's happening in e-commerce, it's happening everywhere. Is the pace of change is getting faster as we move to more and more digitally enabled activities. So we've just got to change pace with technology, and arguably that's what the banks that have been around for hundreds of years have been doing, right? Otherwise they wouldn't still be here.
That's right. And there's lots going on in the continued evolution of those larger banks and what they're doing. So it's great to see good competition in the market, and obviously risk controls frameworks around that are progressing equally along that. I guess moving on then, do you still think that we obviously had this wave of moving to 3 lines of defense model in terms of approach to risk management? Do you think that's still the right way to go?
It's interesting. I mean, the 3 lines as we've currently got them, or different people, I mean, they're still open to interpretation. So I'm not going to say it's right or wrong. What I'm going to say is, if you look at safety management systems, they all tend to have what I would call a sort of 3 eyes approach, for one of a better term. So there's the people doing the activity, and they'll be it might be a quality audit. They might be doing their own quality checking to make sure that they're okay. Then you've got some sort of form of peer review. So you might have another part of your own organization coming along to shed their eyes on it and go, oh, okay, yeah, that's that. And then of course you have independent audit. So wherever you go, you have these 3, let's call them functions rather than necessarily lines of defense. And then it's because ultimately that's what you're trying to achieve. There's the people who are doing it. There are people who are doing, and I call it, peer review, which you can sort of see as the second line of defense. And then you've got audit coming along. Now, the benefit of peer review is somebody else who hasn't got the job has got some other experience that says, okay, I'm going to look at it and I'm going to question it. I'm not involved in it on a day-to-day basis. Now, in aviation, in my experience, we used to do that through quality management. So let's say you have one organization has done their own internal quality audit, and then you would have a local quality audit, which would be brought through. So you'd use people who do the same thing, but maybe on a different squadron or a different outfit, and they'd come and have a look. And so you've got that level of peer review, and then you've got external quality audit who come along and give you the third line view. So the question there is, it's not really, is 3 lines of defense the right way to go? I think that those 3 activities are still required, right?
Yeah.
The question is, how do you do them? You could say do we need to have a large second line of defense that's dedicated to those activities all the way around, or do you have a smaller one that's delivering a coordination function where you're leveraging, will take some people out of one part of the organization and get them to come and have a look at the other organization and do that. So what you're doing there is spreading ideas around your organization, which could be quite useful. So I think there are different ways to achieve it. I still think the three elements are required, and it's that it should be a level of spreading good practice. How do you, or bringing different people with different views to be able to see things. I do think, though, the second line of defense has a slightly, what they need to be doing is having that wider view and being able to look down the whole stack, as it were, or look at the product end to end, however you want, and sort of really joining the dots across the organization. That should be that function. I think going forward as well, we've got to leverage more data to do that.
That was going to be my next question, actually, in terms of, you know, a lot of people are talking about data, they're talking about AI, they're talking about analytics as being sort of the core tool that things are going to be driven forward with. Obviously, you've talked about the evolution in terms of how things have changed, but yeah, in your opinion, how important is that data and firms that are on board with that data analytics piece going forward?
Yeah, I think going into, you know, the 21st century, as we talk about, the volume of data is increasing. So, but what we need to be able to do then is employ intellectually curious people, some good data scientists, to understand what's the data telling us. Yeah. And how do we, you know, we've got loads and loads of data, but are we actually mining it, understanding it, building alerts off of it, even to understand, are we doing the right thing? Are we going, you know, as we try to do things faster and faster and faster. We've talked about straight through processing, but also when we've got, you know, elastic capabilities in the cloud, so we can increase our servers and reduce them, etc. How do we really keep an eye on that in a meaningful manner that's going to help us go, yeah, okay, we are managing our risk well, or we're not managing our risk well, and leverage that data to be able to really understand that. And I think there are opportunities to do that. I think there are also opportunities as we build new products, new digital products, to build into the concept of building those digital products. One is to really understand what is the design, and to bring in a level of design management into that, so that we don't end up with we've built this and then we've got another change program where the first thing we need to do is go and find out what is the as is, right? We should be able to, we've built that's the design we're currently operating. We're working on version 2, and then so version control, I think we should be able to manage that much better. So we've got data around how do our products actually work.
Yeah. So I guess then we need to make sure then that you've got the technology in order to deal with that, but then also the right people in place as well to fully interpret that and make it useful, like you say.
Yeah, and build that into our design, and build our controls into our design early enough so that they are most efficient.
Yeah.
And also then build in what data do we want to get out of that design. And I think that requires close collaboration between risk functions and the technology functions who are building our new products, to be able to then leverage it and go, okay, if we've got this, then we'll be able to demonstrate that we're working, and it will just, you know, we can do it with very few people because we've got good data that's going to be able to give us that situational awareness that we can build on and go forward. I think there's massive opportunity around managing data and providing that data. You know, you can imagine a world where at the press of a button almost you can answer the regulators' questions and go, here's all the requirements that, you know, you've asked, and here's how we've met those, and here's the operating capabilities, and this is how we've done our risk management. Here's your report.
Do you think the regulators are going to almost expect that in years to come? Do you think that's going to be part of the kind of the BAU? Okay, we need this information now. Click, there you go. Do you think it's going to be that tight, if you like?
I don't know. It'd be interesting. I doubt it necessarily. It depends on what you get them used to a certain extent. I suppose if you get them used to being able to have that, then they're going to want it. So I think there's there is a level of, I think we need to work together to demonstrate that we are not just fundamentally. If you go back to, I'm going to jump around a little bit, but fundamentally, regulators are there because you need to protect the financial environment, system, and you need to protect customers. Yeah. Ultimately, that's what we're there for, and we need to work together to demonstrate that that's what we are doing, and that they're in a comfortable position to understand that. Yeah. Which requires a level of, a level of capability in across all of those functions, inside the financial services and within the regulators as well.
Yeah, it's certainly going to be interesting how that pans out in years to come. So, okay, I've got to mention it. Everybody's been talking about it relentlessly for the last couple of years. COVID has obviously impacted all of our lives hugely in different ways. Do you think that almost a shock to the system that we've had over the last couple of years, do you think that has changed the way that we look at risk management? I mean, there's a few topics out there with the obvious ones: operational resilience, for example, cyber risk, and others. Do you think it's changed the way we look at it now?
I think it's an interesting question. Has it changed the way we look at risk management, or actually has it just introduced us to new sources of risk? I mean, what for me is interesting though, and a level of being able to take risk. I mean, if you turn 2-3 years ago, if you turn around, if I said to you, we can run a 60,000 people bank or a 200,000 people bank almost purely from people working at home, you wouldn't have believed me, right? No. And I think if we'd have said that to any of our boards, they wouldn't believe you either and go,
that's right.
It's not possible. So what's interesting is, I think firms have had to take risk and get comfortable with that, and that can be from just individual managers who always thought that time in the office was the metric, and actually having to let go and sort of realize that time in the office is an input metric, not an output metric, to actually, crikey, we need to, how do we solve the VPN? How do we get it into everybody's homes? And then you start to get into things that people might not have thought about, right? So let's say I'm sat here having this conversation with you, but maybe you're a client of mine, and I've got an Alexa sat there that's just listening to everything that I'm telling you.
Right.
Did we think about that properly? Did we think about those sources of risk? We've had to, don't get me wrong, we've had to start thinking about those. So I think, when I talk about new sources of risk, you've got that whole infrastructure around VPNs and etc. But also, you've got your Alexa sat in your home. What else is listening to that conversation? We thought about who else is overlooking your screen, but what else is listening and dealing with all those different risks. So I think COVID has forced us to address a number of different risks and to actually take risk, because that's the only way to achieve it. And in so doing, we've had to move at pace, which has led to, well, actually, again, it's back to that question right at the very beginning of, how do we take our risk management functions into the 21st century to help them deal with the pace of change and to be able to manage when things are upon us?
And it's an evolving situation, and will continue to be. And I think that's why it's such an interesting area, because we have to adapt, we have to change, and you've got to bring the right tools, the right skill sets into the business in order to deal with that. And it's almost that different perspective, that different look at things sometimes that needs to happen in order for you to spot these risks.
Definitely. Although, facetiously, one might say that we would probably say that a global pandemic is a once in 100-year event if we were doing our, scenario analysis. And guess what? Been 100 years since the last Not the last truly global pandemic that we talked.
And let's hope it's another 100 years before we have to deal with it again, right? So,
well, don't get me wrong, there've been pandemics in between, you know.
True, yeah.
Ebola and SARS and all the rest of it. They just haven't been quite so globally.
One that turned all the lights off. So, I guess just sort of going back then from a different perspective, I know that's quite often what firms are looking for. Certainly when we're having conversations with our clients about bringing in risk talent into the business, quite often it's about bringing someone in with a slightly different perspective. At the moment, a really hot topic out there, of course, is diversity. In your experience, how much of a problem do you think that is at the moment within risk management? Do you feel like we have the different perspectives on offer to that we're all sort of striving for?
So I think, for me, the biggest issue is cognitive diversity. Right? It's people from different backgrounds who've seen different things are able to see different parts of the problem.
Right.
And I think going forward, we need more of that. Right. I think, have you ever read Matthew Said's book, Rebel Ideas? I think he explains it really well. It's sort of, the problem space, he draws this picture, the problem space is a rectangle. And he says, if you get everybody who thinks the same way, they only see that much of the rectangle, and you can overlay, you can overlay their views, but you're still only seeing a small part of the problem. If the problem space is that whole rectangle, you're still only seeing a small part of it, because people's experiences, they're only seeing that, they're used to seeing that sort of thing. And he explains that's why the CIA didn't understand the signals around 9/11. And what you need to do is find people who are, I go back to this, intellectually curious, who are prepared to ask questions and come in and see different parts of that problem space. So we need to populate our risk teams with really diverse backgrounds, I think, and not necessarily always from financial services, but people who are intellectually curious and able to just look at what's in front of them and challenge it and say, okay, well, why are you doing it that way? Does that make sense? Have you thought about this? We've seen different things, and I think that's really important. But for me, the thing that is most important in doing that, as well as bringing the different backgrounds and different perspectives to bear, is we've got to create an environment which allows it to happen. We've got to create that environment. We've got to have leaders who are creating the environment to deliver psychological safety, which makes it okay to challenge stuff, makes it okay to ask the stupid question, makes it okay to go, hey, I really don't think that's right, and values that and sees that as an opportunity to grow and to make things better, and go, that's really good. I don't know why nobody's ever asked that question before, but actually now you've asked it, that's unpacked a whole different thing, because somebody's come and looked at it and they've seen a different part of that problem space. Everyone else is just, it's the blind spots, if you like. You need people who can come in and see the blind spots, but in an environment where it's okay to surface those blind spots, and you value the people who are demonstrating that. Otherwise, then they're not going to stay, and they're not, or they'll just conform to everything else. So I think there's two elements to that. There's the cognitive diversity to bring in different experiences, different views, different ways of thinking, and then creating that psychological safety to enable that to happen. And I think that we've got to have that leadership to be able to deliver that.
Oh, definitely. And again, that's I think that's an interesting dynamic within the context of the last couple of years, is that having people remotely can often challenge that culture and that ability to come up with those ideas and that kind of creative environment that quite often is most productive around the table. So it would be quite interesting to see now how, as we are phasing back into the office, if that situation now changes. But I think that cultural element, that challenging piece and the ability to challenge the norm, I think is such an important and integral piece within a risk management department. Certainly from our perspective, we have a number of clients who ask us to bring in people who can challenge that, and whether that is from a different perspective within financial services, As an example, we've had in the past clients who are in the asset investment management industry, for example, asking us to bring in people from a banking background who have had to go through this process in the last 10 years about implementing that change, and almost for them to come in and say, okay, well, look at our business, let's look at this objectively and say, okay, what do you think we need to do? So that challenge culture, I think, is so important, and I definitely agree with you there. Definitely agree with you.
Yeah, definitely. For me, it's the way ahead, and that bringing people with, just diverse backgrounds, diverse ways of thinking, and making it safe for them to sort of go and play, for want of a better term, and give them free rein to go and go, wonder what this tells me, and then to be able to draw those conclusions and for you to act on them, I think is fabulous.
Fantastic. Cool. Well, that's brilliant. Thank you. Thank you so much for your time today. I think it's been really insightful. Thank you everybody for listening. I'm sure you'll enjoy. This is part of a series of conversations that we're going to be having here at the Risk Partners. For all of your hiring needs across the governance space, feel free to get in contact with us. We look forward to continuing the discussion. Do head over to theriskpartners.com for any more information about us, and hopefully you'll tune in for some more of these interesting conversations. Paul, thank you very much today. Thank you for your time.
Brilliant. Thanks, Rob.
Thanks. Bye now.